Hello traders, hope you're doing well. Today we saw a significant fall in the market towards the downside. Nifty fell by more than 140 points, Sensex more than 380 points, Bank Nifty fell by 600 points, and small cap index also fell by 700 points. Only IT stocks and FMCG stocks today closed in green. Rest all the index was in negative. Now traders, if you go online and start looking for reason why market fell today, everybody is coming up with their own reason. For example, in some websites, they say everybody were expecting that BJP will win the election. But now some people are expecting Congress has a chance of winning. But me personally, I'm not sure what changed overnight for market to change their view, saying that from BJP, Congress will win. I'm just speaking in terms of market perspective. No, everybody is waiting for the election result, which is coming out in the month of June. When market do not have any kind of reason, they always try to bring in something related to election, justify the reason for market moving towards the upside or downside without any proper data. So I personally, I don't think this is something which we can consider. Now there are other reasons also. People say why market fell today, but I feel we have to go as per the data. Now when I go online and start looking in terms of data, first thing which I want to focus in is FII and DII data. Now traders, if you look here, FIIs has always been selling in the market. In the month of Jan, there was a significant sell-off. In February also, FII were selling in the market. During that time, what was happening? DII were continuously buying in the market. In the month of March also, the same thing happened. Now in the month of April also, FIIs were net sellers and DII were net buyers. So every time FIIs were selling in the market, DIIs were buying, right? Sometimes more than what FIIs were selling. Now if you see this month, things have changed a bit, where FII has sold for 5,500 crores till now, and DIIs have reduced their buying. Every day you can see FIIs are selling in the market, but compared to previous months, look at the amount of net purchases done by DII. It has significantly reduced. Now since FIIs are selling more and DIIs are buying less, I feel that is why the market is seeing more momentum towards the downside. If DII starts buying, then again we can see some recovery, or when FII starts covering their short, we can see some recovery. Now the discussion that we did right now is based on data. We are not just bringing up any random reason justify the market momentum towards the upside or downside. So I think we need to rely more on data. As of now, I feel FIIs are selling more, DII are buying less, especially this month. That is why we are seeing some downside in the market. Now there are a lot of other reasons also people are giving. We have already discussed FIIs are continuously selling in the market, and next people are saying pre-election jitterness. This also we have discussed. Now the next reason what people are saying is premium valuation. They're saying that Nifty is trading at 12 months forward PE, that is price to earning of 19.3 times. So their market there is some kind of correction, and Kotak Institutional Equities observe that the Indian market continues to trade at expensive levels. So because of that, maybe the market is correcting. This is one of the reasons what people are giving. Now the next reason people are giving is unimpressive Q4 results. Now the next reason what people are giving is lack of fresh triggers. That means, let's say the Fed chairman starts saying there is going to be interest rate cut. That time market might start moving towards the upside. Or let's say BJP won the election. That is also a trigger in the market. Maybe the market will continue to move towards the upside after a correction. Or if Congress win, market can fall even further. Anything can happen in the market, but they're saying that there is no fresh trigger for market to react. So it is a bit choppy. Some reasons what we see online we can take into consideration, and some reason doesn't make any sense. So these are some of the reasons why market fell today. Now in our yesterday analysis, my view about the market was bullish, where I expected FIIs maybe today or tomorrow they might push the market towards the upside because there are a lot of stop losses available on top. So today morning, after discussing about important support and resistance level both for Nifty and Bank Nifty in private Telegram group, somewhere around 9:45 I shared my view about the market, where I expected the same as per yesterday analysis. If market corrects, I expected it to move towards the upside because there are a lot of stop losses available. Only if market consolidates within the range and gives a breakdown, then we can see a continuation towards the downside. I was also referring HDFC Bank and Reliance Industry for the trading setup, especially when Bank Nifty gave a breakdown and Nifty, it had come to the supporting area. I expected that market has a chance of moving towards the upside because many times we have captured momentum during trend reversal. So with that logic, I planned my entry somewhere here. Market started moving towards the downside when the day's low was broken and there was continuation and Bank Nifty was not showing any kind of reversal. without thinking too much, we exited from the trade. Now, if you go to free Telegram channel also, you can see what time I entered and what time I exited the trade. Now, if you ask me, risk is the only thing that we have under our control. We had a view here, market will move towards the upside, but if market is going against my direction, without thinking too much, we need to exit, right? If I was holding on to the position, I would have lost, I think, additional 50 to 60 points. So I feel it is always better to fight another day rather than competing with the market, because we all know market is supreme and we cannot challenge the market. If market is going as per our direction, it is giving us results, we'll hold on to the trade. Just like yesterday, right? Just yesterday we captured this moment and we also predicted this fall in the market. But today market is saying, no, I'm not going as per your view, I'm going in the opposite direction. That time, without thinking too much, exiting from the trade is the best thing that we can do, rather than thinking, from this level market will reverse or this level. Especially when India VIX is increasing day by day, both the side movement is possible. If the market is moving against my direction, I think it's better that we exit without thinking too much. Now, this is how I feel I need to approach the market: one trade per day. If the market has hit my stop loss, I'm not going to re-enter. If the movement is more than my risk, I'm not going to hold the trade. If I'm just 60% or 70% confident about the setup, reducing my lot size. These are the certain things that we can do to reduce the risk that we have in the market. So to summarize, FIIs are still selling in the market. Compared to previous month, DIIs are buying less, because of which there is more fall in the market. When FIIs start covering their shorts, then we can see a 50 to 60% reversal in the market. This is what I'm expecting right now. Now traders, one more thing which I wanted to discuss about is a tweet from Harsh Goenka. Now he is from one of the oldest reputed company, that is RPG Group. Now the Kanimara Hotel, what you see, it is theirs itself, and Seat Tires, what you see, that is also theirs itself. Now in this tweet, what he's saying is, many promoters are inflating the price of the stock by joining hands with many brokers. I'm not going to go in detail about this, especially is referring to small and micro cap companies. Now I personally stay away from small cap and micro cap companies. If you are personally investing in these stocks, please be very careful. Now, if you are interested to know more about what Harsh Goenka has said, I would suggest you to go online and check, because there are many articles where he has given a clear explanation of how this is happening. Now, these are some of the things which I wanted to discuss today. Now, let's analyze Nifty and Bank Nifty chart for tomorrow. Traders, this is a chart of Bank Nifty, 15 minutes time frame. Here, you can see I've drawn a trend line where continuously it is acting as resistance. Yesterday, we had discussed about a setup where market continuously, if it starts making a momentum like this, at some point of time, if it breaks this level, then there is a possibility of momentum towards the upside. Now, many retail traders, they would have marked this trend line as well, right? Tomorrow, if market opens somewhere here or here and it just consolidates like this, I feel this area to be a no trading zone. Today market has moved. Tomorrow, if it wants to stay sideways, that's okay. Maybe we will get better trading setup on Thursday. But in case market opens with a gap up, anyone who entered put option would already be seeing some loss. So if market is consolidating at the upper level and gives a breakout, that is when I'll be looking for a call option trade. See, when market opens with gap up, and if it wants to do stop loss hunting, it has already got push from the low. As market starts moving towards the upside, the retailers might be exiting from the market. So this is the plan to capture the movement. And one more thing, from recent swing low to swing high, if you draw the Fibonacci level, this is exactly 0.5 level of Fibonacci. There is a chance that buyers might re-enter the market. Now all the weak players who entered the market during this reversal, they would have exited. If the actual buyers are here, they want to re-enter, they want to push the market towards the upside, that is when a bigger pressure for the sellers can be seen. Now tomorrow again, if market opens with a gap down somewhere here or here, we have immediate support, which is 0.618 level, 47,850. So here I'm just going to avoid any kind of trade. Market, after moving towards the upside, when there is no other stop loss hunting level, we can see a momentum towards the downside. That is when looking for a put option trade would be better. Now those, after looking at this momentum towards the downside, if you want to enter a put, then it is better that you wait for market to pull back, and at the upper level with reasonable stop loss, if you are getting a trade where market is facing resistance near 49,000, which is a psychological level, after giving breakout, if it's moving towards the downside, maybe you know what is your stop loss and what areas can be your target if market reverses. That is when I'm more confident on the put option side. So all I've discussed right now is my plan. Now tomorrow morning in the free Telegram channel, we'll be sharing pre-market report, and during the live market, I'll be sharing important resistance and support level in the market. Continuously, the support and resistance level was working, but today there was a continuous fall. Market did not respect the levels. Maybe we can wait and watch tomorrow how market are reacting at the levels that we discuss. Traders, this is Nifty chart 15 minutes time frame. Just like Bank Nifty, Nifty also is moving towards the downside, forming lower highs and lower lows. Now Nifty has been consolidating within this range today. Tomorrow if market breaks today's low, I'm not interested in a put option trade. Maybe after filling this gap again market can consolidate and then start moving towards the upside, or it can trade between 22,170 and 22,300. If market just holds on to the upper level and gives a breakout, that is when I'm interested in a call where I think market can move towards the upside, breaking 22,500 and later reaching 22,570. There's a resistance here. Maybe market can give a breakout. After that, we can see a correction. Because once market reaches this level, there might not be any other stop loss hunting level. That is the area where I feel market can reverse. Now 22,200 to 22,150 is a range where I feel market can hold a strong support from where we can see a reversal. Now this whole month I've been speaking about continuous FII selling in the market. If they're selling, of course they will have to cover their short. With that view itself, still I'm approaching the market. As of now, this is my view. Further details will be shared in the Telegram group. Thank you for watching. I'll see you in the next one.